Yeah, I'm losing my
Pete,
edge.
today we are talking about trading distance in stocks. It's something that
right.
you and I have
A little bit
touched
new
on.
vernacular.
You and I over the years have come up with a bunch of different terms for things, chill zone and stuff like that, that I'm sure the majority of people probably dislike, but also a lot of statistics as well. And
We're just brimming with sunshine.
hopefully people like some of the statistics that we're looking at here today. They're actually kind of simple ideas when you think about distance and also displacement. Now you'll remember we talked about displacement a while back here. And with distance and displacement, it's just a matter of measuring something's movement, how far it has either been displaced or how far of a distance it is covered. Two different things that you can see are distinct here in the orange line, conveying how displaced the stock market here at the smalls has been, which is just, as of January 2nd or whenever we started trading here in 2020, it was at about $51. And now it's at about $44 or $45. That's the displacement there. Just a straight vector from start to finish. It's like if you went on a road trip, Pete, and you, drove up to Wisconsin and then back in the day, you would have displaced yourself zero, right? Because you came back home, and so you didn't actually arrive anywhere. It's like if the stock market started at 50, traded for weeks or months or even a full year, and then closed at 50 at the end of the time frame, displacement zero. Distance here in white, Pete, is the more interesting piece to us active traders, people trying to get a little bit past the passive investment. And it's all those little things here and there. If you stopped off at a gas station, that's maybe another half a mile that's tacked onto your distance. If you stopped at Portillo's, which I know Pete is going to do, then that's maybe another quarter of a mile.
That's your mutt.
Onto your distance there. I know you love your French fries, but but do you understand kind of the concept here? It's usually used in physics and in a classroom. Outside of that, you don't really hear displacement very often.
No, absolutely. It makes perfect sense. And I think it's a good way to talk about another way to look at opportunity within markets.
Sure.
Kind of like if you took a week off to go up to Sheboygan and you came back, and on that, if you didn't go anywhere, did you really use any of your PTO? I guess the argument is no. But
so you're saying I've got my PTO left? No, let's get back to the numbers before this becomes an exercise in airing dirty laundry here on the Small Stakes Show. But yeah, in 2020, Pete, as you could imagine, a lot of distance covered here in the small stock 75. It's been a volatile year. But what's interesting, and this is, to me, when people are saying, why take the extra effort to learn how to actively trade? Why look at these things and why not just buy the stock market, put it away, check on it every couple of weeks or months? Or I know people who don't check on investments for, half of a year to a year at a time. It's in the long run, the stock market moves higher, Pete, and that's all that I care about. Well, what you miss out on, Pete, is $132 here in this stock market of distance with just $7 of displacement. And so the real debate here becomes, if you're logging into your platform on a daily or every 2 days or 3 days to actively get in and out of positions or to hedge your underlying portfolio or to do all these things, what you're getting at is the opportunity of $132 in the small stock 75 relative to just $7 lower in the first 6 months. I mean, that's what we're talking about, that active versus passive, right?
Yeah, absolutely. And that's the opportunity it's a fine line of saying foregoing. It's not a binary decision. You don't try to capture all 132 or I got to live with 7. But I think for me, the takeaway here, Frank, and this is wonderfully taking context around market and opportunity in a different way. And we can't do enough of that. As long as it doesn't add complexity. Here it speaks to the number of opportunities that lay within that. And it's not taking advantage of all 132. It's finding a good mix between just the passive exposure and where the opportunity lies. And that's, that's different for everybody. There's guys who live and die each tick, and sometimes I'm
Sure.
inclined to do too much of that. And we've talked
Yes.
about the two-edged nature of that. So let's find the opportunity that lies between these two extremes.
Yeah, I totally agree that this number here in 132 relative to 7 doesn't mean that you need to try to catch every single dollar of movement in the stock market. You and I both know people who do try to do that. I remember Larry, I sat next to him at the Board of Trade. He tried to do that every overnight session. It would be, the Japanese session, Pete, and interest rates are barely moving. There's no data coming out. There's nothing happening. And he's trying to literally get every tick of
Oh
distance.
yeah.
And that's not the game that we're trying to pitch here. It's just the fact that you see this relationship of, okay, if I just bought or sold the stock market on January 1st and just looked at it today, it's either $7 with me or against me. Whereas in the midst of all of this, you've had dozens of $7 opportunities on an intraday basis. Sometimes we've seen these big moves of $7, even intraday with the small stock 75. And then also on just a day to day, you make it your own opportunity, whether you like to check in on things intraday constantly, or I've got plenty of friends who, now that they understand this concept and they understand that once I buy or sell something here, I don't have to hold on to it to here. It's very empowering, and you can kind of set your own schedule, your own parameters around these things. But just getting over the fact that I don't need to make a decision here and then just hold it until here. So many people, they handicap themselves into saying, oh, well, I bought the stock market here, so I can't do anything in the midst of here. It's really a frustrating thing, but it's very empowering when you see, oh, I could buy it here and then I could sell it back here, and then I could buy it again here, sell it here, I could sell it here and then buy it here. Not needing to make one decision and living with it for months or
Right.
years at a time is very empowering. And that's what the displacement versus distance conversation is all about. And taking a step further, Pete, you've got these numbers of distance covered by /SM75 in 2020 so far. And it's nice that we line up here where exactly here
Isn't
at
that what a great number?
we're at the midway point here of 2020, Pete, and the small stock 75 has already covered more distance than the average full year going back to 2016. And, the futures haven't been trading for, 3.5 years, but we have index data going back that far. And on the average year, you see about 105 points of movement, 10,000 individual prices, which is great. It's a nice little size there for retail traders to get in and out of different unique price points for profits and inevitably sometimes losses. But what's nice is 2020 so far, Pete, 6 months down the line, and we've already done more than that. And to me, this conversation goes one of two ways. You could say to yourself, oh, well, this market is out of steam and it's going to flatline for the rest of the year. But I would be more of the thinking that 2016, 17, 18, and even part of 19 really, 19 was the most volatile one out of that bunch for sure, were honestly, to me, the outliers relative to what a normal stock market is. I would say last year and this year are more of what a normal stock market is. Unique prices back and forth. On average, the stock market ending up higher than where it started the year. But I would say that this number doesn't need to revert to this. It's more that this is finally coming up to see more volatility, more unique prices. And I think that this is something that is sustainable for the market to continue to see a lot of distance, right?
Agreed. And we know with SM75, it's again, it's another equity index that sits in the world of equity indexes. It's got more elasticity, again, a patented word, Frank,
Yep.
which is what you want. And that's where it feeds through. This is another way to look at that. And for me, a greater amount of movement is great, but there's usually a trade-off that comes with that, whether it's a consumption of, everyone's constrained by buying power, or consumption by a move that is uncomfortable. So here you've got you've got an opportunity presented itself that and I love the fact here that you're talking about the uniqueness of opportunity in terms of different price points you can get involved with, which speaks to, so I could stay engaged. I can keep my number of occurrences up. I can efficiently express an opinion if I have one, and I can get more. I can get. It's one thing to express an opinion. We talked about this within a 4 tick range in notes. I mean, there
Sure.
are four. You've got four choices to pick the
Yeah.
range of the bulk of the day. Again, your friend at the old shop would try to figure out which of those four and which way he wanted. The problem was, depending if he was at the second or third level, he either wanted to be long or short. Well, that's
Yeah.
an awfully tough game to play. Here, I've got lots of different ways to express an opinion, which and points to do that. So, and that management points and that location piece is critically important in my mind for success.
Yeah, you're absolutely right. It's nice to have this combination of unique prices,
Okay.
13,200 already this year. Each of those, also the other side of the coin there is each of those equates to a dollar. So often in futures you have, oh, a lot of unique prices in crude oil or in E-mini S&Ps, that's nice, or even the micro E-minis, that's nice, but each of those unique prices is worth $5,
Right.
$10, $25, and that's going to equate to nice unique prices, nice opportunity, but too big, and you can't take advantage of these potentials
There
when
you go.
every time that you're wrong, for every hopefully couple of times that you're right, you're getting cleaned out for, instead of $100, $1,000 or $2,000. And Pete, this is kind of a summary of how we tend to apply this distance covered, because looking at this Christmassy chart here, you're seeing in red, just in my mind, examples of selling opportunity, and in green, either covering that sell or a potential on its own buying opportunity. And
Absolutely.
so when you're looking at displacement, you're looking at passive trading. You're looking at just a green or red dot here, and then vice versa here. In this scenario, when you've got so much volatility, you've got so many unique prices, you're saying to yourself, wow, this market is expensive up here at all-time highs of $55. I'm going to get short with the intention of covering that in an active short-term manner. And then also, you miss out on this opportunity. Like we said, Pete, you can't get every single dollar of
No,
distance covered, but then you get back in down here when you think, oh, well, now it's been only a couple of weeks, but my bias has gone from this is expensive and I want to get short to this is real cheap and I want to get long, and having the opportunity to go back
right.
and forth here. This is trading distance, as opposed to trapping yourself in this displacement mode where it's, I made my decision here, I can't take advantage of any of this, and then I'm going to have to just get out at the end of the year and we'll see what happens.
This is a really cool metric around displacement versus, those unique prices. I think this is great. This is going to be a fun. Again, as I always do, Frank, I co-opt your very original thinking and like, let's do this on everything. But I really like this, and obviously, it would be great if we threw each of these boxes in the perfect fashion. And I do have to say, all of a sudden, you've become very interested in drawing a lot of little circles on the screen, which I find you took all my drawing tools away and now you've co-opted them. But that's discussion for another day. But, granted, you're not going to throw the dart perfectly, but look at the opportunities back and forth. And that's the takeaway from this and the power of that. And, if that move from 55 to 30 was $35,000, I'd be saying, yeah, there's lots of places to be right, but there's lots of places to be wrong. It's $250 on the extreme. All of a sudden, lots of good things could happen.
Yeah, and it's really just a matter of, like we kind of talked about, from the start of the year to now, the stock market at the small exchange has been displaced 7 points, which is $700.
Right.
Which, if you sold on January 1st, that's a nice little move, sure. But what's nice is, or in my mind, even nicer, this is a $7 move right here. This is a $7 move right here. And this isn't even a matter of, like we talked about, catching all the $7 moves. You missed it in here. You missed another one right here. You maybe missed doing something right here. But it's a matter of, in the first 6 months of 2020, you could catch one $7 move, and you could be right or wrong depending on if you were long or short. The stock market is lower on the year by $7. Or you could look at multiple $7 opportunities throughout the year. And that's really the game. That is why we educate, why we go the extra mile to become active traders
Right.
relative to passive, is we're seeking that opportunity. It's not for everyone, but hey, we think that there is opportunity in there. And so, yeah, what does this mean going forward? How do I find, it's nice to look at these buying and selling opportunities and say, oh yeah, well,
Boy,
you
police
take,
still looking for you, huh?
dude, I can't, there's so sirens and motorcycles constantly,
All right,
constantly.
so we've
But
got opportunity. Let's put context around it on a daily and a weekly basis.
yeah, right here, looking at about 130 and then 3.25 on a daily and weekly basis, respectively. And that's just to say, it's like I said, after the fact, it's easy to see what was a big move, Pete. But in the moment, if you're, say, right here, when we saw this big rally, how do I know it's a big move? Well, in a week's time, they went from $44 to 52, $53. That's outside this big 3.25 weekly average move here. And that's where you might see some opportunity. Of course, it can continue, and there's risk that trade is not the right one. But that's how we, go from this naked chart of no trades to something like, oh man, look at all these different
Right.
opportunities that I caught. And it's we're only 6 months through, Pete. I hope we see another 130 individual point prices, 13,000 more unique penny prices for the next 6 months. But yeah, that's what we're really looking at here in terms of active trader opportunity, distance versus displacement.